Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Mr. Joel Elconin, good morning. How is your day going so far?
So far, so good. Good morning to everybody. Starting the day a little bit in the red. Found some resistance just above the close. We're down 9 3/4 handles at 46.6850. Of course, that out could change at 8:30 when we get some more inflation data. Crude in the red by 49 cents at 83.66. Hit a high at 84.97. So buck 40 off the high. Gold in the red by $2.50 at 18.2830. Silver going the same way. That's down about 4 cents at 24.28. Bitcoin peeling back a little bit, down $1,070 at 66.555. And Ethereum's going the same way. That's down $73.75 at 47.28 Let's bring in Triple D. Triple D needs a vacation after this earnings season.
Triple D just stepped away, and there he is.
I'm here.
I
was here the whole time.
Oh, your camera was off, so I didn't know.
Well, I forgot it off.
All right.
I do need a vacation. This has been just, the market's getting me. The kids are getting me too. I mean, I've had sick kids here for, I feel like, a month. Anyways, I just finally got both kids back to school. And then just middle of the night, 10 o'clock, I just, and unbelievable, the 4-year-old, I hear her, and she's in the bathroom throwing up. She woke herself up from a deep sleep, a 4-year-old, got to the toilet, did not even spill a drop, and got all the puke into the toilet. So hero in that way, but no idea why she was throwing up. She threw up multiple times. She wakes up this morning and she's perfectly fine. So I have no idea what's going on.
Dude, kids are weird,
I
right?
got to keep her home from school because obviously she's throwing up last night. So we got the kids here, and then the boy's throwing a fit because he doesn't have the pants he wants to wear. So welcome to young kid problems.
What you have for dinner last night?
I don't know, actually. I was trading, so I don't even know what they had. So I don't know. Actually, it appeared to be some type of noodle, though. I will say that the toilet.
After the fact.
Okay, that's crazy though that a 4-year-old woke herself out of a deep sleep, got to the toilet and threw it all up and didn't even spill a drop. I mean, I can't believe that. So, anyways, this is a tangent of all tangents, maybe. So we should bring it back
this was a curveball. I mean, I was waiting for.
You said I need a vacation. I was like, I need a vacation from the markets too, because I get killed on something every day.
Dennis, I don't mean to rub it in, but I'm 99% sure you wore that shirt yesterday.
No, I know. Who changes their shirt during earnings season? You got kids puking. We got earnings nonstop. All I do is trade. I mean, I'm trading nonstop, so that's all I do is trade. I got to dig myself out of these epic holes I have every morning. So today's hole, I'm maybe not in a big hole here this morning. I don't know, but I'm not in great stocks either. So this has been one of those, I'd say, a month where it has been a roller coaster ride of a P&L. Usually my P&L is fairly stable overall, obviously individual stocks, but with the moves that we're having, and we've been talking about this off earnings, it seems like there's a stock up 20% or down 20% every day, doesn't it? And multiple stocks today moving 20+%. So I mean, the moves are so extreme moves.
I don't even know, frankly, where to begin. I mean, do you want to start with yesterday, like Tesla, or do you want to go straight to the earnings here? Because we can.
Maybe we should start with Tesla because it loses 170 points because Musk tweets out, "I might sell some stock." I mean, this is the volatile market on individual and overall. The SPY is not volatile, which is funny, Joel. The overall market is really not that volatile, but there is individual stock volatility, something fierce. So yeah, Tesla loses 100 from the high. When he tweeted on the weekend, it closed at 12.22. Tesla's now lost 200 points in 2 days because of an Elon Musk tweet that should I sell some of my Tesla stock? And obviously we think he's going to sell. So I guess that's why everybody is selling the stock to get ahead of his sale. But, is it overdone at this point in time? I don't know. It's overdone to the buy side. It's overdone to the downside. That's what Tesla specializes in. The stock is being overdone. So who knows with this stock? It is wild. I would use yesterday's low 10.11 as a first bounce point. Takes that out, then you probably think $50 lower because that's what Tesla does. So my bogey would be yesterday's low 10.11. Can it hold?
You had a Michael Burry tweet yesterday too. I think that Tesla, but he's been tweeting about that for a long time. And then you also now it's it's a big part of the S&P 500 was getting bigger every day. So yeah, you had a little.
It
bit
knocked
of
the entire S&P down yesterday, Joel. Like if you want to know why you saw the market weak yesterday, it was Tesla. I had a reporter calling me and they were trying to talk about PPI and all the other. I'm like, it's Tesla. The whole market is down because of Tesla. There is absolutely no doubt why the market is down. Tesla. It loses 170 points. It's a big part of the S&P. It's going to bring down a lot of other stocks too.
Well, look at that run. I mean, it had a run from 900, that gap and go on earnings. So it was 900 to 1250 with, nary a down day. And then you got the quiet days up at the top, and then you get the must tweet. It just took a day to resonate with investors. Pre-market low, nice round number comes in at 1,000. We'll see what happens with, test of the close at least. It's just kind of been linking since that 4 a.m. open. But keep an eye on the close. Really hard to find resistance now if this starts to rip. Maybe if you do have a long, you're trying to scale down, maybe, throw something out there at 1030, 1040, 1050, and scale up the size. We talked about that yesterday in AMD. I know Bill Big D was looking at it like, hey, you can't sell your stock if you don't have offers out there, right? So let the market.
Well, yeah, you can.
What?
You can sell it on the way down, but you can't have a feel for the market if you can't.
I'm going to teach you the exact opposite, Joel. Though when I'm gonna take the opposite end of that spectrum with the way every market maker leans on your orders here now. I actually, if you're trading an earnings stock, I would say yeah. If you're trading a non-earning stock, I hate having my orders out there. I hate showing my hand because 100 shares on a mid-cap stock affects the market. I'm not joking. You can have a market that's 20 cents wide and you go and you throw out your order to sell at 100 shares, just 5 cents down from where the best offer is. And all of a sudden they hit the bid and it's offered there.
100
and you're like, what happened? They got a real seller. Oh my gosh, there's 100 shares. There's 100 share orders selling in this market. There's so much envelope liquidity, high frequency liquidity. It's 95% just fluff basically, that when they have a real order sitting out there, it moves the price. Does 100 shares move a stock of Bank of America? Absolutely not. But if you're trading something that trades under 1 million shares and you're showing your hand actively, you can chase the price away from you. So I don't like showing my hand whatsoever. I use a lot of discretionary orders. We're going to talk about this in our but I think if you're just sitting your orders out there, what we teach our traders now is sitting limits makes you a sitting duck. Because one, they'll lean on your orders for protection. The off-exchange market makers will lean on your orders for protection, and they'll pick you off when you're on the wrong side. So, it sits there, S&P is not moving, you got your bid out there, they're hitting, but you're not getting filled, and all of a sudden the S&Ps roll over, and you're filled, and it's here. So I hate sitting my orders out there. I take liquidity, and believe me, this occurs, 100 shares. Like, our traders execute orders. And I'll tell you, the majority of our traders is what's called taking liquidity, where we're not sitting our orders out there anymore because the market makers, the off-exchange market makers, even the on-exchange market makers will use them to lean on them as insurance. So they'll sit on yours because they're so damn fast. They'll sit on your order. They'll buy ahead of you. They'll buy ahead of you because they're leaning on you. And all of a sudden it looks bad. Oh, you got it. Now it's here. Sitting your orders out there makes you a sitting duck. We're going to go into all this in depth in December when we have our next educational event, how we get around this problem.
December 11th, right?
Yes.
I think it is December 11th, Saturday.
Yep, we're going to get that
Saturday
up
in December.
Yep, we're going to get that up on the site this week. But
all right, so let's go to chat. Chat's talking about Palantir here. We should probably we can start there. There's so many earnings. I mean,
this was 2 days ago earnings, though, correct?
You're right. Actually, it was yesterday.
But that's
morning.
okay.
It was yesterday morning. You're right. I don't think we talked about it.
We didn't.
Yeah, the EPS was fine. The sales was good. They actually guided above estimates. And yeah, to those of you asking what's going on, beats me.
No, it doesn't though. It was in line, so it wasn't great. And yes, they did guide slightly higher, but it's really slight. So when growth stocks don't have super growth, they usually do hit them. They want to see a big guide. They don't want to see, oh yeah, 152 billion versus we're going to guide 152 billion or 1.52 billion versus 1.51 billion. That's basically in line. You're not showing me that, oh yeah, we're going to kill these estimates. It's like, oh yeah, we're kind of comfortable with the estimates. So it wasn't a great report. And they hit the stocks. And in this earnings season, they are slamming higher growth names. They are slamming stocks like and this is not a low P stock. It's not a value stock. It's
it's 117 forward P.
They're hitting those kind of stocks. And if they're not blowing the numbers away, if they blow the numbers away, then they're buying them. But if they're not, then they're hitting them. So they hit it. And what you're also seeing in this earnings season is wicked follow through, where we say, okay, we'll buy the dips on stocks that are in uptrends. That tends to work still. Palantir is definitely not in an overall uptrend. It's a no trend. So there's stocks that are in uptrends, stocks are in downtrends, stocks are in no trend. 2021 started Palantir around $24. It's $24 here today. So you can clearly say there's no trend here. So we don't talk about that a lot. Are they buying stocks with no trend? I think they're still buying stocks on dips only in uptrends. So, I mean, you look here, Palantir, there's wicked follow through. They're moving on to something else. You have this momentum capital that just it's a lot of retail capital that just keeps flying into what's sexy, what's moving. That's what I'm buying. That's why there's so much wicked follow through here. And retail is driving the bus to a certain extent. If you go back 10, 15 years ago, retail was 12% overall market volume. It's approaching 30, I believe.
Oof.
So you're talking the retail has taken over a lot of names. And that's why you see these wicked moves. It's retail. Retail is actually driving the bus on a lot of different names. And this is a retail-driven name. Certain stocks are not retail-driven. Some stocks are. Palantir is a stock that I have somebody tweet at me every single day. What do you think of Palantir? This is a stock that's widely followed in the retail community. And you're getting a little shakeout here. I don't know where the stock is going long-term, but it's clearly not in an uptrend. It's in more no trend. It's obviously not a cheap stock. It's a growth stock, and a growth stock that isn't growing at big numbers. I'm not interested at this point in time.
There's a little bit of buying it just at 23.50 as we speak. That's been holding up since 7 a.m. That's some shorter term support. Before you found buyers in late September, early October, closer to 23. So we'll see if you're looking for it to get it a little bit cheaper. But 23, I'd see 1, 2, 3 lows right between 23 and 23 and a quarter. On the upside, a lot of people probably like to see that mark. Right, we're trading down 54 cents. So resistance at that closing price. Usually when you see a big red bar on something like that, it usually gives you another red bar. So see if we get a date with 23 today. Resistance at the close at 24 and a quarter.
The ones that are reversing are the ones that are in clear uptrends. Like a Unity software, maybe we can take it to the earnings from last night. We'll bring it to Unity first. Obviously, the stock is trading down this morning here. It was trading down more last night, though. I mean, did Unity report? Yeah,
it was good.
It was on my list. Yeah, it was a good report. So
good.
Give us the numbers.
And for all you Lord of the Rings fans, you may be interested in this one because Unity is acquiring Weta. If you're a Lord of the Rings fan, you know what Weta is. Weta is the company that Peter Jackson created to help make the visual effects for the movies. Anyway, Unity's EPS beat by a penny. Their sales beat 286 versus $264 million. They guided revenue in line for the quarter and higher than estimates by a little bit for the fiscal year. I mentioned the Weta acquisition. The numbers were fine. The numbers were totally fine.
They're similar numbers to Palantir if you're just looking apples to apples, obviously to completely different companies where they kind of beat, kind of guided higher. The big difference between Unity Software and Palantir is Unity Software is a stock that is loved right now and in a clear uptrend. So they will be more prone to buy Unity on a dip than they will Palantir on a dip. So you get this and you think, oh, it's going to have follow through. This stock's in a clear uptrend. You can see the clear uptrend. And they've already started buying the dip. Please show the charts from last night there, Joel. But they've already started buying the dip. Oh, yeah, you do have it. So you know what? I'm inclined to buy this dip on you as well. There are certain stocks that, if they're in clear uptrends and they're loved and they're strong, and this is a metaverse play, this is the thing behind the thing. I mean, this is the thing behind Roblox. It got a big pop off that yesterday. I tend to think this is one that they will buy back. So if I was looking at buying dips today, and I don't have a position in this yet, but if I was thinking about it, and I am thinking about it, this is the kind of stock that I actually would buy on the dip.
150, 180 is where they took it to off the number. Now you got to bounce a nice $8 bounce, $9 bounce off that level. So it's going to get, I think it's going to get a little bit thicker. If you start to go down again, you can tell it's already thickened up, traded up to 165.
I
Now
think so
just
too.
finding a home at 160. I would, if we do go into reverse and you don't think it's going to the pre-market low, your 2-day low is 154.17. So that's still $6 away. On the upside, you had your old-time closing high yesterday, so that's your next resistance point. That's if it starts to go into rally mode. If it gets near 71, 71.63 was that close from yesterday. You might see some offers at that area between 60 and 60 right here and 170, 163. I think you'd have to make up a number to have one.
And then you could go to the big loser of the day, and that is Upstart. And the reason I would not buy the dip, give us the numbers first. Give us the numbers on Upstart.
Yeah, again, the same story, right? Then because the numbers, if you look at them in the vacuum, they really weren't that bad, at least on the headline numbers, right?
Yeah.
EPS beat 60 cents versus 35 cents. Sales beat 228 versus $214 million. Guidance, revenue guidance for the current quarter came in above estimates. But all of those numbers, all those like that growth, while above estimates, was all down. And you had to know this. You had to look back. Was all down year over year. Their loan
Because
origination.
they really had a big year last year.
Yeah, loan origination was, and again, this is a fintech play. Loan origination down year over year. The growth rate.
This is a tough one. You've got an ugly, and we say technical analysis doesn't matter as much when companies report, but now it is after the report, so we can analyze the technicals. Now you have an ugly head and shoulders where you really took out the neckline around $300 and you're at 240. You broke trend. The stock's now and clearly broken the uptrend. So does it bounce right back like to 300? I don't think so. I think it went down too hard. So It's like a fun line. It's like you can go down a little bit and you buy the dip. When you fall like 30%, then you can rally to 23, which it's doing right now. But are you rallying all the way back? I don't think so. So I think I think I would be more inclined to buy the U dip than I would the
wait.
UPST.
Can I add one thing? And actually, Joel Kulina pointed this out. He'll be on in a few minutes here. But this is actually from the release last night. It's and actually pretty high up in the release, and I'm reading it directly from there now. Beginning in the third quarter of 2021, in order to better reflect actual conversions, we removed rate inquiries identified by our platform as likely fraudulent from our conversion rate calculation. So maybe there weren't actually as many leads as we thought there were. They weren't actually having as many conversations as they thought they were. Genuine inquiries. So
I don't know anything about that. I can just tell you, looking at this,
too close to the pre-market low.
It's not getting away from it really now at this point in time. And this is the after hours low last night.
233.11, excuse me. 233.11 was your after hours low. I did some retracement that comes in at like the 210, 211 area, but oh man, I don't know, 200, is that out of the question today? I do see.
I think 200 is out of the question. 233 is a big number for it now.
Okay. After that, your next daily low is 227.52 if you're looking for an undercut and rally in it.
It's why we started pre-market prep. The whole reason Joel and I started it 7 years ago was obviously we teamed up with Benzinga. Was because we thought people weren't using the pre-market levels enough in their trading. And, that's what our edge, is to a certain extent, is we're looking at numbers that other people aren't looking at, because that 233, if it never touches there, is never going to hit on an intraday basis. But it was trading there, and it was trading with some volume. So that's why the pre-market, charts can matter to a certain extent. So now we have a clear level defined at 233. I mean, if you're just looking at intraday charts, you're like, well, I don't have any levels. Well, no, we have levels. We have the pre-market charts. So using the pre-market charts help to give us a little bit of an edge.
That's it, and it's very tricky to try and understand which way things are going to go here because, like
It's
you
down
said,
72
just the size of
bucks.
these moves. Like you want
The
to look at
size of the moves.
like you want to look at Coinbase right now.
Yeah.
This and this Coinbase one actually shouldn't have been a surprise if you remember what Robinhood said, right?
Yeah.
Massive
Good.
deceleration in retail activity on their platform.
That's a good
But
point.
again, Coinbase numbers in the vacuum were okay. Their EPS beat the estimates. Their sales, I guess, their sales was light, and that was the problem. And they said that retail trading volume, quarter over quarter, was down 36%.
Wow.
So that right there was the problem.
It's tough numbers. The one thing Coinbase has going for it is obviously it's a Bitcoin play, and if crypto and Bitcoin continue to rally, they'll buy this dip on Coinbase. So this is basically a derivative play. I mean, we can look and say, oh yeah, it's all about their numbers and it is to a certain extent on their business model, but people are just coupling in and they're pairing up every Bitcoin stock. There's like a dozen of them. I do it too as an Arb trader. Bitcoin starts ripping, I buy Coinbase. You buy all the other ones like Mara and Riot and BTBT if we want to go the smaller ones, or Hive. And yes, there's different fluctuations in price, but 3 days from now, what will move the price of Coinbase is going to be the price of Bitcoin. So, and I know you can say, oh, Solera, and they got all the other ones there too, but it's Bitcoin still the driver here. Bitcoin, Ethereum to a certain extent as well. So I think if Bitcoin holds up, I think they do buy this dip. If Bitcoin all of a sudden starts to roll over, maybe we should look at the Bitcoin chart, because that's going to matter to Coinbase at this point in time more than Coinbase. So now that we're past the earnings report. So Bitcoin's sitting here. It's right near the highs. I don't know. It doesn't look that bad to me. So I think as long as Bitcoin holds up, I think the Coinbase dip gets bought. If Bitcoin starts to roll over, then obviously all bets are off. But I'd be somewhat inclined. I don't like the coin dip as much as the U dip, but I'm somewhat more inclined to buy this dip on Coinbase.
You got matching lows on the futures in the Bitcoin right now. Yesterday's low 66,480. Today's low 66,385. You're a couple $100 above that, so that's what you're looking at in Bitcoin. For the coin, it looks like they've already bought the dip. You got down close to 300, and now it's bounced $20 off that. So this one, when you're looking at it, you talked about buying the dip, and now it looks like you're going to have to get some orders out there ahead of that pre-market low in order to get filled. Just the way the buyers have just stepped up since then. On the dailies, I like to try to at least find a couple lows in the same area. And the first thing I can really come up with is, I'm going to say 310, because that spot's there's like 4 lows between 305 and 315. So I'll call it 310 if you're trying to, get in ahead of the pre-market low. But it looks like it's bid now a little bit. The bottom of yesterday's range, that will be your resistance at 345.06. You actually had 2 daily lows there on Monday and Tuesday, right there at 345.
At 8:25, we have 5 minutes till CPI.
Oh, that's right. That's right.
I'm going to leave here in a minute, so give me one more stock. I'm going to get ready for CPI.
Okay, one more stock. Let's do DoorDash here. This is one of your big gainers of the morning, up, I think, 16%, if not more. They're also doing an acquisition. They're buying some Finnish competitor, Walt, I guess, if I'm saying that right. I don't know.
Yeah.
Sales came in above estimates. Adjusted EBITDA was better than estimates as well. And stock is up.
Wow.
I was nervous about this one going into the report. Apparently, I was wrong, because they just decided to not Peloton this thing. They're buying the hell out of it. So a lot of people may be leaning too much bearish in it. It was down because of Peloton. That's why it was weak into the report. So maybe it's that Peloton set the bar so low for it that it was easily able to get over that bar. Obviously, big pop here. That we know they like, if they sell certain stocks down 15-20%, they like to buy other stocks up 15-20%. So throw this into the Ring Central, DoorDash. These are the ones they're buying here today. But I was wrong on this one, at least from my opinion basis yesterday.
You got to 241, believe it or not. So that's $17 off the pre-market high, but holding 220 as we speak. Man, I'm looking at this 220 to 225 area. couple tops here at 220 before you fell off a cliff, another top at 225. So, I mean, that's the range. If it holds that area, I know it's kind of big, but it's also, a $200 stock. It holds 220. Maybe you get up there and test the pre-market high. But a lot of people stuck on this too, Dennis, from, late
Yeah.
October and early December. So
I'm going to
a
throw
lot
it
of
to you
people are
guys for
getting their
5
money
minutes
back.
here.
Okay, you know what though? I have a theory. This
Let's
is
hear
my
it.
theory. I think Dennis will be back maybe almost instantly because this CPI number, we only care about CPI within the context of how it changes things at the Federal Reserve and how it could change monetary policy. Obviously, it's interesting, right? We're interested in what the government says inflation is, but the market only cares about it within the context of the Fed. And the Fed already came out and said, "Yeah, we're starting to unwind to shrink our balance sheet a little bit. We're gonna, taper to some extent starting now." They already said that. So do we think the market will react at all to the CPI number aside from like the general interest in this is what the government says inflation is, and we all know we're all feeling it more than that. But I don't actually know if we'll see a big reaction here. That's my hot take.
That's a Spencer hot take. Well, you know what? We today's is the CPI, right? And
Yeah,
yesterday was a PPI. We basically slept through the CPI
the
yesterday.
PPI.
The PPI.
Yeah,
I
you're
mean,
right. We didn't even notice.
and actually there was a bid to the market
Yeah,
going into the open yesterday, and just it looked strong. The market looked very strong, and then that number came out, and I remember seeing it on TV. It wasn't much of a reaction, but we'll see what we get today here. Did you give the previews yet, Spencer?
I think the consensus estimate is somewhere around in the high 5% range for year over year, 5.8, 5.96%. So somewhere in that.
Seems high, doesn't it?
Um, maybe
I mean,
that's
yeah.
on an annualized basis. Of course, we're looking at a point like the actual um uh, sequential number would be 0.6%, and for the core would be 0.4%. That's what they're looking for. But yeah, I was just thinking about this, and I kind of realized that we only really care about these numbers within the context of how they change things at the Fed, but the Fed already played their hand. So I'm not sure if the market will really care too much. Well, we'll find out in 40 seconds from
All
now.
right. Well, let's see
So
if we got anybody jumping the gun here. We're on the 1 minute chart. I don't go to the 1 minute chart unless we have
no.
numbers like this. So we got the 1 minute chart up there. Mid range on the session. That comes in right here, right where we're at. It's 69 and a quarter. Now, if you get a nice pop, let's be keeping an eye on that close from yesterday. That close from yesterday is 78 and a quarter. And the pre-market high is right there, right at 80 and a quarter. So that's what I'm looking at on the upside. If they do like the number, on the downside, this pre-market low, 58 and a quarter. Nothing there for you. More relevant number, even though we traded to it overnight, is 63 and a quarter. And the first reaction is down, a spike down to 63 and trying to rebound. 63 and a quarter was yesterday's low. It's teetering. The buyers are trying to defend that. They do. What did we go to there? Come on. I got to look on
All
my,
right.
because it's
So
not a
so
new
it,
low of the
it came in
day.
a little hot, Joel. Maybe it's a smidgen on the hot side, right? Because I
Smidgen on
mentioned.
the hot side?
Yeah, I said 0.6% was the estimate sequentially. We actually came in at 0.9%, and then the core number was 0.6, which was a bit higher than the 0.4% estimate. So it was a smidge hot. Smidge hot. While we're at it, we also got jobless claims. Although I didn't look too closely at those estimates there. So I mean, a little bit higher than we thought, but you can't have it both ways. You can't complain that the Fed doesn't account for true inflation and then complain when the number is coming higher
They
than.
don't like it, Spencer. They don't
Okay,
like it. Dennis
fine.
is Dennis is not going to be back as soon as we thought. We'll probably get Joel Kulina on, but didn't really blink much at the low from yesterday. It's still a relevant number at 63 and a quarter. We're bearing down on the pre-market low. Pre-market low comes in at 58 and a quarter. If you're basing your trading on your daily levels, your daily highs and lows, 4-day low, 50.75, but a little battle going on here at 46.60. So overall, street kind of leaning the right way, at least on the
All right.
S&P, selling it
All
overnight.
right.
And
Chat's
dude,
giving me grief for saying it was a smidge higher. Fine. You're right. It was 50% higher. Yes. Your math is hard. CPI, just to put it to bed, year over year, increased 6.2%. Versus, like I said, the estimate was in the high 5% range. Core CPI 4.6% year over year versus a 4.3% estimate. So yes, high, but again, I repeat my point. People always criticize this number for, it's not, it doesn't really reflect my reality. Well, here it is coming in higher than the estimate, and I don't know. I guess you can't complain when it's lower and complain when it's higher as well. But market, I guess surprised. You can see by the reaction. So I stand corrected on my hot take from a minute ago. I guess
yep. And
I guess the big number would do that.
Okay. All right. They're trying to the buyers are standing here near the pre-market low. They're trying to get done. That pre-market low is 58 and a quarter. We just were at 59 and a quarter. Look like we're going on the low here. They are going to take this pre-market low out here. 58 and a quarter. That's it. That's the only relevant number. I do just want to take a look at your banks.
Yeah,
And
banks are all
this is
moving
good
here.
news for the banks,
It
right?
is.
The
It
banks
is.
are rallying. Let me go to, I have to go to the after hours of the pre-market chart here to accurately reflect. There's a nice move up in Bank of America. Higher interest rates, good for the banking sector. JP Morgan, a little bit of a pop, still up only 20 cents. Let's just go general here and see what they did with the XLF. Not a lot of trading here in the pre-market in the XLF. I guess Bank America is your most liquid one, and you did get a pretty good move on a percentage basis.
JP Morgan pretty liquid.
Yeah, it's $168 stock. I mean, it's only actually the volume is really light in that this morning in JP Morgan. Oh, I was looking at the wrong stock. 9,300 in JP Morgan is traded as opposed to over 103,000 in the Bank America. But look like the Bulls have defended the pre-market low of 58 and a quarter. Where were we at when this whole thing started? It's another relevant level if they're going to shake this number off today. Going into 1 minute, right where we were ticking, we were at 68.50. And you got kind of light volume on that minute bracket. So there's your resistance up there, 68.50. Looks like a battle between 58 and 68 heading into the open. What else do we want to look at as
Well,
far as
I just want to reiterate that, the transitory inflation has so far failed to be transitory, which of course we all know this, but every time we get another data point every month, it's
gets
just
worse?
another nail in the transitory coffin. Because not only is it staying elevated, but it's actually going higher, right? So I don't know, man. It's tough.
I mean, also, I mean, the reaction here in the market. I mean, you're looking at this and wow, 2 down days in a row. But look what, just look at where we were at in, at the end of September and early October. I mean, just, remember all that choppiness, all that crazy action that we had here between like 42.50 and like 43.20, and you finally had a breakout. So you had a 300-point rally here, folks. I mean, this is, if you're looking to buy the dip, this is it's not much of a dip yet,
Yeah.
but
All
if
right,
you
wait,
were waiting on all these
Dennis.
other days
Dennis,
here,
thumbs
well,
up if you're good, man. I can't tell if you're. Oh, he says thumbs up. All right, Dennis is back. And then, how was that?
Trying to buy the banks off it. That was
Okay.
my initial instinct, same as yours. I mean, you think but we're chopping around a lot too, so I'm still in a couple of trades here, just trying to figure
okay.
out whether we're going up or down.
All right.
I don't know. The number is hot. I mean, this is exactly what we've been talking about here. It's the BS the Fed keeps feeding us. Oh yeah, we're running 2%. Running 6.2%. It's definitely not 2%. And then you can start looking at everything that isn't inflationary and everything you don't track, even like product sizing, which we talk about, because everything gets smaller.
Oh, yeah.
So, I mean, the hidden inflation is just everywhere. So I don't know. This is the major problem in the markets right now. It's a major issue. I don't know how they solve it, because the way to solve, when you start getting hot, in CPI numbers, and when you start getting inflation that's definitely ticking up, is to raise rates. But they can't raise rates because everybody's built on debt and they don't want people losing their homes. So they're stuck in a really hard place right now. And it's going to be a tough one for them to figure out, where, how to manage this. Like, what's the solution really? So let's say hypothetically, okay, well, let's start raising rates. Interest rates or CPI is too hot. We've got to cool it off somehow. We start raising rates. You'll raise a little bit, it probably doesn't do anything. You raise a lot, and everybody loses their homes, and we go into a tailspin recession. So the only solution they really have is to keep lying to us and say it's transitory. It'll eventually go away. It'll eventually go away. Is it going to go away? I don't know. And this is why I don't want to be in cash. So you got to keep staying, in certain assets. We know I increased my bank exposure a month ago. It looks like, that's, and that's actually has been working because the banks have went up. I was selling stocks like utility stocks. I was selling stocks, that are, 4 or 5% dividends, AT&Ts and Verizons, because I think you've got to be in stocks that are benefiting at least from a tightening bias, because they can't keep ignoring this. They're going to have to stop tapering at a certain point in time, like completely, like not just like stop printing money. They're going to have to stop the printing press at a certain point in time, because it's coming to roost. Like Peter Schiff calling for this for 20 years. It took a pandemic for it to happen, but it's here. Don't you agree here, Joel? Like, you read that Peter Schiff book, and obviously I can't remember the title of it. Was it Crash Proof? It's his book from 15 years ago, where he was calling for inflation to really start to escalate. Well, it took a pandemic for it to happen, but Peter Schiff, you are finally right here. We are in the Peter Schiff environment here. You would think gold and silver is things to own. You know what? Gold and silver is starting to look a hell of a lot better here. Gold ticking up this morning. GLD has a 4-day run here where it's starting to look good. You're starting to see the inflation trade pop all over the place. This data today is not going to make the inflation trade go away. Inflationary environment is bad for high growth tech stocks, because those future earnings are worth less. So bad for your Kathy stocks, good for your banks. So that's what you've got to be thinking. Kathy getting hammered this morning again. 118. She was looking okay there a few days ago. She's starting to get hammered again. So I don't want to own high growth tech right now. I would rather own boring banks, commodity stocks, stuff that actually goes up in an inflationary environment.
Let's get Joel. We'll come back to the Rivian IPO. Let's get Joel Kulina's thoughts on this here from Wedbush Securities, and get his thoughts on that number. Joel, good morning.
Morning, guys.
What do you make of that?
No, I agree completely with what Dennis I know it was a little bit of a rant, but I respect it. I think you hit the nail on the head. I mean, I think since Powell kind of tried to pull a fast one on the market, back in December 2018, he's stayed in line with kind of propping up valuations, keeping a very accommodative policy in place. And if this Fed's, at least they've been consistent in one thing, and that's saying that they're going to be very transparent and clear in their message. And I wouldn't expect any curveballs. And until Powell we hear a shift in his tone, you have to take him for what what he's saying. And, I think you got to stay invested and realize that, the Fed's going to continue with their ostrich policy and just keep their head in the sand.
How do they not? I mean, I don't know what they can do. I think behind closed doors, they're sitting back and having the same conversation and saying, what do we do? I mean, how do we fix this problem? The whole entire world is built on debt. We've got a housing bubble that would collapse if we really start to raise rates seriously. So we're just going to tell everybody it's transitory and eventually this is just going to go away. But I don't see it going away.
No, nobody does. And I mean, obviously, you're seeing the price of everything is going up, and you said it very well. So I couldn't add anything more intelligent than how you put it. And but again, I think at least with this Fed, they're going to be very, very transparent and visible if there's going to be a major shift in policy. I just don't see them rattling the cages anytime soon, which is kind of comical, but it is what it is at this point, right?
Do you think they'll pull this is going back. This is dating us, but sometimes they just would come out of the blue
Yeah.
and do something. Like a quarter point hike or something like that.
Yeah. I mean,
Maybe instead of like telegraphing it with the meetings when everyone expects it. I don't know. What do you think, Joel? We haven't
no,
seen that in a long time. You
I,
think
I,
the
I
Fed
feel
might
like
just slap us aside the head?
yeah, I feel like we saw that a little bit in December, like again, just about 3 years ago, and the market wasn't happy. If you remember, I think the market bottomed during that pullback around December 20th, or maybe even Christmas Eve for that matter. But and the market really hasn't looked back since, other than obviously a few major speed bumps along the way. But Powell's stuck to the script, and I don't see. I'd be shocked if he kind of went adrift and did his own thing, and they surprised us with any sort of proactive policy, which would make sense. Again, another hot CPI, but it just I just don't think you can bank on that.
Joel, what do you make of the earnings moves here? Because I'm trying to find a theme and I'm struggling, right, to identify one here. It just seems
that's been the problem. You're not alone. I mean, it seems like almost every night we get another flurry of earnings, and we're past the peak now, but it's just like guys are getting kneecapped almost at any point. Going back a few weeks when Texas Instruments really had this soft guide. Everyone shorted all the analog semiconductors and more the hardware kind of storage names. And those shorts have been getting carried out on the back of better reports on the back of it. Roblox up 42% yesterday. The valuation is beyond insane. I think it's enterprise value and market cap's more than Activision at this point. And guys are struggling. DoorDash, a big move to the upside. Guys were kind of trimming or that stock into the recent rally. And then you're seeing a name like Unity. I think Joel touched on it earlier. Unity down 5-6%, I believe, last I checked, maybe a little bit worse now. I think that is a name you want to be buying the dip. If you can stomach the valuation and kind of buy a little bit and tuck it away for a few years, they are very well positioned to benefit from not just the metaverse theme, but the shifts in the Apple ecosystem and the pay structure. And so I think there's many reasons to be bullish on Unity, especially with the acquisition of Peter Jackson's Weta studio. That will help expand their TAM and also kind of just fits really nicely into the robust game engine as well. But yeah, I mean, as you can tell, guys are being caught off sides on a lot of these earnings moves, and the volatility is it's been off the charts. Meanwhile, the major indices really haven't done too much. But kind of really what jumps out at me to start this month in November, the Goldman most short basket's up 11%. And that compares to the market being up around, S&P being up around 2%. So that really speaks to the pain being felt out there, especially in the hedge fund community.
Interesting thought. What do you say to people that are in some of these stocks that maybe have these great growth stories and are just so beaten down?
I'd avoid them. I mean, I think
well,
you guys.
What if you're already in them? Is my question.
Yeah, I think you got to reevaluate your investment strategy.
Yeah.
I mean, we're seeing it with Cathie Wood kind of unfold in real time. We know she was.
What though? I was looking at the ARK. I own the ARKW. Sorry to interrupt you, but ARKW doesn't look that bad.
It doesn't, but I mean, we all know. Imagine her flagship, say, ARKK. Imagine. Sure. I mean, I get it. Tesla's the number one holding, with a 10% plus weighting. We know what's going on in Tesla isn't normal right now. We can't really explain the fundamental reason why it went gangbusters, last week, and we can't explain why the stock really fell 12% yesterday. Yeah, you can point to a couple of reasons, but I think you look under the hood at what she's been averaging down, whether it's been Skills, Coinbase, Robinhood, Teladoc, Zoom Media. These are companies that are struggling, and they're showing signs of decelerating. So if you're in a name and the chart is broken and it's a fundamental, there's a fundamental reason behind it, I'd be looking to put your money elsewhere. There are still great companies out there, and you don't need to chase the dream with some of these more, meme momentum type of stocks.
And great point from Chris Catchy in our chat that the inverse ARK ETF actually launched yesterday. If that's your thing.
What is that? What's the symbol on that?
SARK, SARK.
Somebody came out with an inverse Catchy.
Yeah,
that's a lot of hate right there. Yeah.
Well, that's a lot of hate to come out with that product.
Is it though, or is it just an
opportunity?
Is it just an opportunity? Is it something?
Yeah, I mean, it's worked. I mean, it's been a great trade all year. I mean, like I said, if you really strip out Tesla from her performance, and then you peel under the hood of some of her other ETFs, she's got a long list of like mid-cap biotechs in her portfolio with massive holdings. She's a 10% plus holder, and I think 10 to 20 biotech companies. I mean, where liquidity is terrible. If a number of these start, the dominoes start falling as well, you really could see a self-fulfilling prophecy of implosion with some of her ETFs this year. I mean, it just seems like there's just the risk management's not in place, and I just don't know how you keep defending stocks on the way down. That again, they had the big COVID tailwinds. Well, that catalyst has been removed, yet still defending to no end.
Joel,
You're working against yourself.
Yeah,
I was going to say too, a higher inflationary environment is the dead enemy for Cathie Wood, because she's in all these high growth tech names, and those future earnings are worth a hell of a lot less in an inflationary environment. So she is almost the same as the Fed in that way. She comes on TV and saying, oh, the inflation's going to go away. I'm more worried about deflation, because obviously if we go into an inflationary environment, she's going to get hammered on her positions. So if the inflation continues to escalate, if we start to see deflation like she's predicting, then she ends up winning maybe. So I guess, it goes back to inflation versus deflation here. I just don't see a lot of deflation right now.
Exactly. So, I mean, it's been a struggle though. I mean, like I said, all these momentum type of stocks, the besides the major indices really not doing much. I mean, some of the volatility under the hood's just been fantastic and pretty incredible. And she obviously has, she's involved in a lot of those names that are heading in the wrong direction. And the irony is she's been selling Tesla. That's been what she's really been kind of peeling out of to fund the losers.
We skipped over Rivian. If we can go back to that for a second, Joel, I wonder if you have thoughts on that IPO. They upsized it. They increased the price. I thought we were past this. And by this, I mean all this EV hype. We were in it, and then we moved on, and now I guess we're back.
I can't really speak about Rivian itself for other purposes, but right. I mean, I think, the EV hype is real. I think the details of the infrastructure bill finally passing, and that obviously led to the charging names going to the moon on Monday and Tuesday. But yeah, I think only thing I really can say is that the company has a great management team, and just from a manufacturing technology point of view, it's pretty impressive. But I can't really talk too much about that though.
All right. Joel Kulina is the head of technology and media trading at Wedbush Securities. The guy is like a machine. I don't know how early he gets up, but it's before me. I can tell you that.
He starts last night.
It's true. He probably started. That's his secret. He starts the night before, I bet. That's his
exactly. You have to. Right. You have to.
Thank you for joining us as always. Have a good one.
Guys, take care. And also, real quick, just what kind of one to keep on your radar. I know you guys are big momentum chart guys. Look at SailPoint. The ticker is SAIL.
Yeah.
Accelerating SaaS revenue. Faster than expected model transition as well, subscription model. Breaking out today on good volume. And this is a stock I think you want to be buying it into the strength. So got a little GARPy element to it as well, even though you're seeing obviously it's being re-rating a little bit higher today. But I think for any of your momentum investors out there, we know cloud security theme's not going away anytime soon. Keep this one on your radar. I like it going to $70 plus.
They had earnings last night that appeared to have been better than estimates. So good call out. We were not going to mention that, so we wouldn't have known otherwise. Thanks a lot, Joel.
All right, guys, take care.
All right. Do either of you guys have thoughts on the Rivian IPO? I'll give you the numbers right now because, like I said, they had upsized it. The original pricing, the guesstimate for the pricing was a range of 57 to 62. They priced it last night at $78 per share. Yeah. This is probably the most hyped IPO of the year, at least that I can think of.
They need to do this last week. This is going to be the worst possible day for them to do this. One, because high growth is coming off. Two, Tesla. Musk is going to be a major impact here on this because Tesla has just fallen 200 points. Obviously, your direct comparable that you're going to look at is that. I mean, this thing's going to open up with a market cap of probably General Motors. And I'm not sure that this market environment is going to just come in here and say, I want to buy it up to two General Motors markets caps here. I think it's going to, 78, it looks like it priced at 78.
Yep.
I think you get that initial little hype, that initial little pop. I think it's going to have a struggle to hold that 78. And maybe the market makers are going to try to hold it up there. Obviously, well, I shouldn't say it. It's probably going to open up way over 78, but I think eventually it's going to have a redate with 78. It probably opens at like 120 or 130 because that's what these bloody things do. But it's hard to say. We don't know where these things are going to open. I'm just going to say if they did this last week, I think the stock would show a lot more strength than it's going to. So I think it could be one of those where it opens and starts to puke right away.
I think what they're doing is the way they're pricing the IPO, it's a dollar for every car that they've produced and sold.
Well, that's 156 only. So, maybe
it's not that far off, Joel.
$156 a share, but I mean, it's
not a good day. I would agree with you on that.
It's a bad day for them to be having this. I would almost I guess they can't pull it, but man, you're coming into a market environment where all of a sudden 2 days ago, the market got musked. And yes, that's going to be a verb now, musked. And that's what happened to high growth here. 200 points off for Tesla. They're coming in Rivian. Are they coming in buying a hand over fist? You got the retail trader pretty spooked and hit right now on some of these higher growth names. So they don't got a taste for that right now.
And
this is not the kind of stock. This is not the stock you're looking for. There's another Star Wars reference. In my opinion, this is not the stock you're looking for.
Wait, Dennis, you have to do the Jedi mind trick thing.
That's what I'm trying to do. Did I not do that?
No. So and also, what I fear is all anyone sees when they do 5 seconds of research here, and all they see is, Amazon backed it. Amazon knows what they're doing.
Too.
Ford, right? Amazon and Ford, right? But there's more to it than that. So
I'm long Ford, and if Ford has run up into this event, and I'm gonna stick with my Ford because I bought it at $7. I still think there's a lot going on here, but this has had a nice run into this event. I think Ford's trading down here a little bit this morning, and maybe it trades up when the Rivian comes around, but I wouldn't be chasing. You could get a little bit of it depends on what Rivian does, but if Rivian has a whimper here, Ford could get hit too. Don't kid yourself. So talking against my buck again, me and Joel are the only people on the street that do that.
Wait,
so
you're not selling?
I'm not selling my Ford now.
Oh my goodness.
One, I don't want to pay the big gain. I'm almost 200% on it now. And two, I just I believe in this recovery for electric. I believe in electric vehicles, and I think it's still cheap EV play. I think it's all going to be EV. I like General Motors too. We know I've liked General Motors for a long time. We know I sold my General Motors ahead of the report, which I didn't rebuy and I should have. But I still have my Ford. I still have all my Ford. I'm sticking with it. But again, I would not be buying Ford now. It's had a run up in the Rivian. I'm hoping for a pullback, maybe get pulled back to like 18 or something where it cools off a bit after if this RIVN does indeed whimper, and then maybe a strike on it. But as of right now, like Ford's run a long ways.
Nearly matching ranges in Ford. You couldn't get up to that. When I talked about that pre-market high yesterday, and it never really sniffed at in the regular session. But there's definitely a seller lurking at the 2050 area. Your last two highs, 2042 and 2051. There you have your sellers on strength. And right now, I'd have to say 1935 is your support. That kind of splits the two lows, 1933, 1934. That splits the two lows from Monday and Tuesday. So that's what I'm looking at in Ford. S&Ps did undercut the pre-market low. We were at 58 and a quarter. They got everybody in the water thinking, we're going to 46.50. Made a new low at 56.75. So a little rebound here going 36 minutes into the open.
We'll use some ticker time here for 5 or so minutes. So drop your tickers in the chat. Do I need to talk about SoFi? They report tonight. I'm not sure what there is to say about it. What do I need to say about SoFi, Martin? I don't know. They report earnings after the close.
I have a small trading position in it right now, so I'll limit my comments.
I don't know what I'm supposed to say about it. It's just...
people taking profits ahead of the report, and it just also like the market environment too, down 97 cents. I just don't like this candle here. I mean, you had a big run up. I'd keep an eye. That low is way down in 2028. I don't think you're going to see that today. What you need to do is get back over that low from yesterday. Resistance at 2161. And I don't know. I think you're going to have to, if you want to buy this ahead of the report, under 21, but I don't think you're going to see this low at 2028 today. But that's what I'm looking at. In SoFi had a nice run, just peeling back ahead of the report.
No, I'm not buying more into that question. Hey, okay, we got a couple not super high flying stocks in the chat. Like Win, they also were on the earnings calendar. Did they report or did they report tonight?
Yeah, they did. No, they reported last
They
night.
reported
and
last
this
night.
just did a whole lot of nothing.
Whoa,
You got
yeah,
some growth stocks going up 20%, some growth stocks going down 20%. They didn't give two craps about Win. It
Nope.
never even hardly moved.
Nope.
You can say that initial tick. Okay, did it really tick down to $90? Is that right on the earnings report?
Mine says 89.
Well, and it was there for like a split second because when I didn't even see that, if that's correct. Like I never even saw it trade down to there. I just saw, that it really didn't do anything at all, and it's still doing a hell of a lot of nothing. This is still a reopening play. I think we're still in full reopening mode. I think this is more of a kind of stock I'd actually like to own in an inflationary environment where people are going out and doing things. It's not obviously an inflationary. I shouldn't say it's nothing to do with that, but I think it's a reopening play, and I think we're fully ongoing reopening. I actually kind of like the Win. I still own my Las Vegas Sands. I rarely add to losers in the long-term portfolio, but I bought more Las Vegas Sands at $38 a couple of weeks ago. I brought my average cost basis down to 46. So I still kind of like that play too. So I like the casinos.
I mean, overall, not a great trend, but if you look at if you're looking at the Win, I mean, you did come off that low, the COVID low, got up to 140, and you had a good pullback. So the monthlies, you got 2 monthly green candles going in a row. Quiet day, you're quiet in the pre-market trading. If you could get through this 2-day high of 98.60, it got a gap fill at 100. Coming back on the downside, 89. There was some volume on that print, but see if it can hold the close. If it can hold the close, then in this kind of market that we have today, then good chance on this one. But really, kind of in the middle of nowhere too. Win, WYNN.
And then, a few people are asking about SOS. It's halted news pending, guys. I don't know. This halt could last all day for all I know, right?
What stock?
SOS. Whenever a stock is halted for news,
I don't even follow that stock at all.
Yeah,
it's a cool ticker symbol, but I don't even know what the company does.
maybe the ticker symbol is a warning. I don't know. SOS. I'm not sure why they would.
What was weird was Hive blockchain yesterday, though.
Yeah.
And I don't know if Frank knew it, but I tweeted at him. I'm like, they halted that in Canada. They never opened it until it never opened at 9:30. It was halted in the pre-market in Canada, and so it basically never opened in Canada until 11 o'clock. But it was trading freely in the U.S. for the first 45 minutes until they halted it. So it was halted pending news in Canada. Yet in the U.S. on the Nasdaq, it was just trading.
Wait, what was
and
the
finally
news?
They halted on the Nasdaq too. I don't know what happened there. Why you would halt on one exchange and not on the other pending news. Then they halted it and they had some financing, and obviously I still own a big chunk of my Hive. I did sell a little piece of it yesterday just because it was a double for me, and usually when they double I like to get out, but I still have a big chunk of Hive.
Okay, that is interesting. Yeah,
it was a weird halt. So
yeah, weird. All right. Hey, it's 8:59. Hey, I haven't asked for likes. I haven't groveled enough today, so I'm going to grovel right now. If you haven't already, hit that like button, please. We'd appreciate that because that's how you can show our support. And yeah. So Joel is going to go over to premarketprep.com. Dennis is going to crawl back into his hole and
try to figure this market out. Hey, believe me, if you're doing great in this environment, you're doing great, you're in the right stocks. This has been an interesting environment. And I tell you, I like consistent P&Ls, and my P&L is very volatile here right now because it just seems like random stocks. Like yesterday, I was short GE and I was trying to claw my way back. And I actually did claw my way back to green somehow. It took all day though. So it's like when I trade all day and I don't make any money, I feel like, it's pretty disappointing. But when you start in a big hole because you're short a stock that all of a sudden comes out with splits it up into 3 and rallies $14 in the pre-market. It's a pretty big hole to climb out of. And obviously, if I would have held it, and people say, "Why don't you hold?" You know why? Because I don't want that $14 loser to turn into a $24 loser. You gotta cut those losers, regardless. I know I lost 8 points on it yesterday. But I didn't lose the most. But obviously, hindsight capital 2020. Sure, I should have held it, and it would have came right back in, and I hardly would have lost anything. But you can't just, this market's very hard to. Yeah, you don't know. It's hard to interpret. You got to cut the losers when you can. My game is minimizing the damage as much as possible. So, I thought when it was up at 125, I was like, well, I wasn't buying it up there because I thought it was way overdone. When it came back to 118, 119, I was like, wow, I just saw it at 125. Is it worth $5 or $6? I kind of thought so. Pulled back significantly here. I'm obviously I talked it. I'm not a fan of what they were doing here. That they have to split up into 3 companies to try to get the stock price to go higher. And obviously the market wasn't a fan either because they gave it all back. But usually when your stock's breaking up, usually they're going to go higher.
All right, everyone, have a good day. Go get them.
All right, go get them, guys. And if you want, not quite the opposite, that would be mean, and not quite the opposite of Dennis's strategy, but something a little bit different, a little bit more YOLO. If you like what Dennis and Joel discussed about risk management, but with like 50% more YOLO, then stay tuned to our very next show, Live Trading with Benzinga. Mitch, Zunaid, Ryan, myself, hang out with you through the open. Doing some trades, doing some YOLOs, but also always controlling our risk. Really just hanging out through the open, right? Because it's the most fun time of the day. So that being said, please remember all the information from our show meant to be used as informational purposes and not for investing or trading advice. Thanks to our guest, Joel Kulina. Thanks to Aaron Bree walking right behind me. Thanks to all of you in the chat. There he is. And I'll see you guys over Live Trading with Benzinga starting in like 2 minutes.